This course uh, is essentially for all staff working in accounts and heading organizations to understand the various laws applicable to not-for-profits, and also to understand what are the recent changes that have happened, because the law relating to charitable institution is evolving and changing every time. So we welcome everybody, and we begin this course today. And basically, the objective of this course is to, you know, educate not-for-profits on the fast changing landscape. Basically, this regulatory landscape in this country that is changing very fast. So it's more to understand and to be familiar with what are the changes that are happening, and those changes are very sweeping changes, even at the cost of the existence of an organization. So one has to understand what are the and fully aware and educated about what are the changes in law. The second is to empower, basically given the fact that everything is digital and also faceless. Okay, so there's nobody to whom you can approach for understanding, and therefore the idea is that key functionaries and finance staff are can rely on this information that we would share in these 8 sessions to get empowered for taking decisions on the desk. Okay, so we are not saying that you replace anybody with yourself, or you look at the consultants as not required or anything, but the idea is that you need to have education as well as better interface with various consultants and authorities. Only after you are educated is when you will be able to do that. The session plans for these 8 sessions is something like this, which was also mentioned in the brochure. So we will begin with the code of direct taxation for not-for-profits, part one. I can only say that these 8 sessions are all meant for charitable institutions. So nothing out of course, everything is within the course. And therefore it is very important to understand and to learn and to get educated on various facets relating to law. This course this time is more on themes. Okay, so we have the direct taxation code. We will do the CSR law, which is applicable to corporates, but how does it affect NGOs? Because we are the implementing partners for various CSR projects. So very important to understand what the CSR law is and how do we, comply with this uh, on behalf of the corporates in a certain sense. Because as long as the corporates depend on you, you will have to ensure that you understand the compliance bit. The session number 4 is on FCRA and FCRR. So we are not going to do all rules and sections, but we are going to understand the architecture and also the recent updates that have happened in FCRA and FCRR. The social security laws, all the social security laws that are applicable to not-for-profits, we are going to see, and also the changes that are going to take place under these laws, under the new labor codes, is something that we will go through. Then we have 3 new sections in a certain sense in this course. One is on the GST for not-for-profit. So what is it in terms of the goods and services tax, which the NGOs should know even if you are not registered. If you are registered, we will look at that in a different way. What is the law relating to GST for not-for-profits? Then the next one is the securities laws for not-for-profits. Again, this is a very new subject, and the securities law actually refers to the social stock exchange. So the framework relating to raising funds and getting your securities listed, we are talking of not-for-profits being able to raise funds from the market as well as list their securities, is what we will cover. The last is, having understood the various statutes around not-for-profits, can we look at the compliance calendar? And we will like to do that for a year, maybe 25, 26, since it's just begun, to understand what not-for-profits need to do in terms of compliances, what are those timelines and what needs to be done. This will be a follow-on to the initial sessions. As far as this session is concerned, which is session number 1, which is part 1 of the Code of Direct Taxation for Not-for-Profits, our session will be for about 2 hours and maybe slightly more for next 5-10 minutes, depending upon the number of questions that we have. Session number 1 is our session on the first part of the Code of Direct Taxation. And that Code of Direct Taxation is nothing but the income tax law. Okay. So the first thing is what we are going to do is this is the layout for today's session as long as we are able to cover the session. The first one is the definition of charitable purpose and the type of charitable institutions under the income tax law. Now, I wish to mention here that we are doing the Income Tax Act of 1961 as it stays today. We will also do the ITB, that is the Income Tax Bill of 2025, which is still in making, and see what are the changes that are proposed for not-for-profits in the new Income Tax Act that is proposed to be created and through the income tax bill, which has already been, presented or, in which has gone to parliament. So the ITB 2025 key changes that are going to happen is something that we are going to see. But for now, our entire focus is on the current tax law. The next one is the new scheme of registration, including the latest updates. So there has been a lot of change in terms of our registration procedures, status, and what happens. So we were going to cover that. The third is, of course, the Code of Taxation, which is the Section 1113 of the Income Tax Act. We are going to cover that in detail. The next one is on computation for purposes of exemption. So once you know that you are covered under Section 11 to 13, what are the provisions relating to computation? We will see them in a summary for purposes of claiming exemption. The next one is maintenance of books of accounts, which is now a mandatory condition under the income tax law. The last, of course, is the ITB 2025 and what it means in terms of changes for not-for-profits. Nothing, not everything changes. Of course, the layout, of course, the chapter numbers, the clause numbers, the referencing, all that will change, but not necessarily the content of the provisions relating to the 1961 Act. So we will see that in a certain sense as the last section in our session today. So let us begin by understanding that as far as not-for-profits are concerned in this country, there are three types of constitution or incorporation possible for running a charitable entity. One is a society under the Societies Registration Act of 1860. And imposed by state specific society acts wherever there are. So most of the states do have state societies act, and then therefore the State Societies Registration Act 1860 is subsidiary to that act, because as far as section society and trust are concerned, it's covered under the federal structure. So both the central government as well as the state government can legislate. That's the reason that you have State Societies Act in addition to the Society Registration Act of 1860. However, the states where there is no state specific society act, the Societies Registration Act of 1860 will prevail. The second one is trusts, which is and we are talking all about public charitable, mostly we are talking of charitable trusts and we are talking of public charitable trusts. Okay, so all our discussion revolves not around private trusts but public charitable trusts where the beneficiaries are public at large of our charitable activity. Second is that we would be doing mainly charitable institutions. Okay, we will dwell on religious and we will dwell on religious and come charitable as and when to understand what these are. But our focus will be on charitable institutions. The second is trusts under the Indian Trusts Act. Okay, so the Indian Trust Act 1882 is a piece of legislation which actually is for private trusts. It's not meant for public trusts. However, in several states, there is the State Specific Trust Act, okay, and that will prevail again, just like societies, okay. However, where there is no specific trust act in a state, the Indian Trust Act willy-nilly applies to the extent that it can apply. That's how the interpretation is. And since the Indian Trust Act 1882 is a very simple piece of legislation, the compliances for a trust, therefore, are much looser compared to the other forms of charitable organizations. Now, I'm not getting into the details of which one is better and which one is not. We are not getting into the key features of these three types of entities that can do charitable work, but we are actually trying to say in terms of the broad optics of which of these three. Again, since trusts are part of the federal structure, therefore both can legislate. The third one is, of course, the Section 8 company, the Section 25 companies under the erstwhile 1956 Companies Act. Under the 2013 Companies Act, it is Section 8. These are not for profit companies, incorporated. Okay, they are incorporated under the Companies Act, okay, as not for profit, without having to use the word limited, private limited, with restriction in terms of distribution of profits, with no mandate on having a share capital. So all those factors. Remember, the trust under the Indian Trust Act is a creation, is just a creation. That creation is formalized through the trust deed. So what gets registered as far as a trust is concerned is not the trust. It's only the trust deed which gets registered with the sub-registrar's office or the charity commissioner, as the case may be. If you have a charity commissioner, of course, with the charity commissioner. If you have a registrar, it's the sub-registrar who registers, all kinds of contracts, because in absence of a state-specific trust act, that's the office to which you will have to go for registering your trust deed. The society gets constituted under the Societies Act, and therefore you get a certificate of registration. You get registered, you don't incorporate. So those words are different. However, given these three types of entities, and please remember, under under the new act also, under the 2025 bill also, these are the types of entities which will continue to be mandated for charitable work, okay. Now, having understood that the form of organization for doing charitable work can be one of the three, each of them has its own features, okay, and the founders or the people who want to set these up, they will have to take a call as to which one they would want to, depending upon the features, depending upon compliances, depending upon how robust the regulation is, what's the kind of democratic principles that need to be followed, what is the number of people, what is the geography that you would want to cover, how do you look at the direction of your organization in the coming years, and so all those factors will decide on the form of organization. However, once you are created as a charitable institution, when you are not exempt from taxation. You are just like a for profit entity till this stage of getting into existence. All right, you are supposed to do charity. Can a for profit do charity? Yes, a for profit can do charity. However, the distinction now comes when these kind of organizations then now decide that their income should be exempt from taxation. And irrespective of the form of organization that you have chosen, they will all have to go only to one tax law, that is the Income Tax Act 1961, for purposes of exemption or compliances under the Income Tax Act. So that means that there is no distinction in the Income Tax Act as far as charitable institutions are concerned. The provisions might be different slightly, but majorly all of them have to comply with the income tax law. And that's where we are now headed to. Before we get into the specific provisions of the Income Tax Act, it's very important to understand what is the definition of charitable purpose. What constitutes charitable? Now, from the incorporation laws, we have come to the income tax law. That's the subject that we are studying today. So whatever might have been you chosen as the objects under your charter, that is, in case of a society, the memorandum of association; in case the trust deed; and in case of a company, the memorandum of association again, will have the mandatory provision relating to the object clause. Now, that said, you will now come to what is the definition of charitable purpose under the income tax law, which is defined in section 215 of the Income Tax Act 1961. Please remember that this will become section clause 223 in the ITB 2025. Uh, so there are 7 limbs as far as charitable purpose is concerned. What I want to make you understand is that when you set up your charter, okay, and you set up what you are proposing to do in your work, or you have done that for the last 20 years, or you have done it in 2021 when you went on for re-registration and filed form number 10A, please ensure that the definition, the charter, the objects clause in the charter kind of mirrors what is the purpose of charity, or what is the charitable purpose definition in section 215. And as you move on with FCRA and others, that synchronity, or ensuring that they are all in alignment, is something that you need to do, going forward, and be mindful of that. If you haven't done it properly, probably at the time of renewal now in September 2025 is when you can do it again. Okay. Because you might have not done that when you had filed form number 10A or way back in 2021. Now, there are 7 limbs here. The first is, again, are these defined in terms of what the meaning is? The idea answer is no. So you'll have to see your charter and see which of these 7 limbs most closely resonate with your object clause. And if there are multiple of them, you can select multiple. You can, in fact, select all of them. All right. But if you are more focused on, say, education as your prime activity in your charter, you might want to pick up education only. All right. So relief of the poor, again, very, very broad, So basically anything that you do for the communities, for vulnerable and downtrodden communities, for their upliftment, of course, comes under relief of poor. Education, more precise, all right? But again, which would mean something like classroom, something where you are imparting some kind of knowledge. The third is yoga, which was introduced some time back, some years back. The fourth one is medical relief. So I think anything which is supposed to now do be with medical institutions and health is something that will come under medical relief. Okay. The fourth is preservation of environment. So anything that you do with the environment, climate change, watershed, forests, wildlife, anything to do with the environment, okay, is something that will fall under the this limb. This is the fifth limb. The sixth one is preservation of monuments or places or objects of artistic or historic interest. So something which is do with the uh, monuments or big old buildings or things like that. The seventh limb, this is the residuary limb. So the first 6 limbs are more functional in the sense you can relate these to your charter. However, if there are activities which do not fall in the 6 limbs and you are doing those activities or under your charter, then you can opt for the residuary limb, which is the seventh limb. It's called advancement of any other object of general public utility. Now, this general public utility is a very wide term and therefore has been misused also. Please remember the laws in this country, whether this is income tax or any law, is getting tighter and tighter primarily because the government feels that these laws have been misused, not only in terms of exemption, but otherwise also. So when it comes to the residuary limb of general public utility, it is a very, very all-inclusive limb, and therefore uh, you have to see, you have to report for general public utility in your audit report separately. Therefore, it is important to understand that reporting for general public utility will be different. If you have objects which cannot fall under the first six limbs in your charter, you will opt for general public utility. The general public utility has two provisions. It says that if you do any commercial activity under general public utility, it will not be considered charitable unless there are two conditions. One is that that commercial activity is for fulfillment of the object of general public utility, which means there has to be a direct correlation. It should be adjunct or incidental to that object of general public utility. So the general public utility object has to be fairly precise, and your commercial activity can only be to kind of support the general public utility object. Now, why this has been introduced is because the general public utility can be stretched to any extent, and therefore the commercial activity can also be uh, factored into such extended definition or perception of the definition of general public utility. Okay, so that is the first proviso that is there, and the second proviso says that the total commercial receipts under general public utility cannot, by way of commercial receipts, cannot be more than 20% of the total receipts in a particular year. So that is something that needs to be clearly understood. Now, as far as the first six limbs are concerned, those first six limbs permit incidental business income, which is incidental or adjunct to the object clause. Okay, that is clearly something that has to be understood. However, in the section 223 of the Income Tax Bill 2025, these provisions have been deleted from the definition of charitable purpose and have been taken into the main chapter of the Act. So please remember that this particular slide, what does it explain? It explains that your charter and the objects in your charter have to mirror the charitable purpose definition under 215 of the Income Tax Act. And if you have not done it, probably it's the right time when you file your 10AB that you correct it. Because at times, if you are pursuing activities for which you have not selected this or these objects, there can be a problem when the income tax assessment takes place, because the income tax department has your charter, has this TNA where you have selected the objects, and can object that, well, these activities that you are doing are nowhere close to the objects that you have selected or you have selected for purposes of charitable purpose in the income tax law. So one has to be fairly careful. I want to also say here that the income tax department is now, very suitably has the information and the database of not-for-profits, which was not the case earlier. So as we saw, charitable active entities can be society, trust, and Section 8 company. When you come to the income tax law, what are the types of registrations that are possible for such charitable institutions if they want to claim exemption or if they want to give benefit to their donor? So here are the four doors that I have for you. Uh, I want to also mention here that there is so much change happening in income tax laws and other laws for not-for-profits that whether we will be able to cover all of that, the entire universe, may not be clear, may not be possible, but we will try to cover as much as possible for you to understand. These sessions are your education sessions. These are not for becoming consultants, but basically for understanding your organization where you work and understanding the work that you do on a day-to-day basis, which unfortunately a lot of us really don't know. So when you come to the income tax law in terms of registrations, these are the ones. Now, the major registrations, which is about 98-99% of the total universe of charitable organization, is 12A and 12AB. That's the gray door. There, this is the door where we are, and when we will study mostly about the 12A and 12AB entities. The 12AA, which was there as a section prior to 2021, no longer exists. So it has been replaced with 12AB, and that is the section which provides for registration of your charitable organization for purposes of exemption under the Income Tax Act. So the 12, 11, 12, and 13 are the sections which will govern a 12A entity. And what are the provisions? We will see that. So your registration will be under 12AB, and you will get a registration in a form which is called 10AC. So every time people talk about Form 10AC, but you have to also see under which section you have been registered or approved in that Form 10AC, because that's a common form. Now, on the left hand side is what is called as 1023C entities. These entities are now merged with 12A, but we will just cursorily see what these entities are. Then the yellow door are very few. So 1046 is another section under which government institutions, which are charitable institutions, get registered, and they are also exempt. So for instance, the All India Textbook, All India Technical Education, the National Skill Development Corporation, all of them are registered under 1046. Section 35 covers all institutions which are doing scientific research. Okay. So these institutions are into applied research, statistical research, scientific research. They can be universities, colleges, but they are registered under Section 35 for purposes of scientific research or rural development programs or things like that. So these are a few of them. Uh, a Section 12A entity may also get a 35 Section 35 registration for purposes of research. So these institutions are mainly for doing research work. Now that's defined in 35. What kinds of research? The last this thing door is what is the blue one. This is the ATG approval. Please remember, all 1023C is an approval, 12A is registration, and ATG is also an approval. Why is ATG an approval? Because this approval grants the person who is having the ATG approval to be able to transfer a benefit to the donor. So ATG approval does not give us any benefit. It gives the benefit to the donor who is donating to us. If we were not ATG, then nothing wrong will happen. Only thing is we will not be able to pass on the benefit of the ATG section to the donor. In addition, several laws which mandate that 12A and ATG registrations simultaneously have to be there for being able to take advantage. For instance, the CSR law is something that will not be also available to us, or where family businesses insist that 12AB and ATG registrations or approvals have to be in place. You may not be able to secure funding from there. So these are the four registrations generally that are available for not-for-profits when you come to the income tax law. I said primarily the 12A registration or the 12AB registration. Please remember there is nothing called 12AA now. I still get 12AA registration certificates saying these are old certificates. Please do not share the 12AA certificate at all because it has no meaning. Okay. Now coming to the 1023C entities for 1 minute is there are two types of approvals under 1023C. I mean, two types of categories. One is what is called as non-approval and what is called as approval on the left and the right hand side. Now, although you are a charitable institution, before that, let me just say that 1023C entities restrict the object as far as charitable work is concerned. Only two objects can be pursued under 1023C. One is education and second is medical institution or health. All right. These are the restriction as far as 1023C entities are concerned. Whereas the entire gamut of 215, including GPU, is available under section 12A. Now, having seen that these are the restrictions in terms of what activities you can take, do you require an approval? And there are certain categories of medical institutions and educational institutions who do not require an approval. On the left hand side are those, that is AB, AC, AD, and AE. 3AB, 3AC, 3AD, and AE. What are these? If your institution is a medical and educational institution and you are substantially financed, wholly or substantially financed by a government, then you do not need an approval. If you are not financed by government, substantially means more than 51%. If you are not financed by government, then if your receipts are of all the institution within that organization are do not cross 5 crores, it was 1 crore earlier. If it does not cross 5 crores, still you do not need approval. So you may have an institution which is educational or medical, which just does not need an approval but has to file its income tax return and get it audited. Okay, get audit done and file its income tax return. Now that is the case, and therefore, if you go to an institution which is a medical educational institution and its gross receipts are not more than 5 crores, it does not require an approval. Second is the right hand side, which is the approval cases. Now, please remember the approval cases have been merged with section 11 and 12. So 1023C approval cases do not now exist, will not be given approval post 1/10/2024. However, those that are continuing to have approval beyond 1/10/2024 will complete their entire period and then move to 11 and 12. Now, what are the approval cases as far as 1023C is concerned? One is national funds. So you have charitable institutions of national importance, the PM Cares, the PM National Relief Fund, and all that. Then you have public religious institutions. So if you were to look at where are religious institutions in our entire structure of income tax, it's in 1023C5. However, that also moves to 11 and 12. So religious come charitable institutions notified by government or public religious institutions created for public good by anybody, that is under the approval cases. All institutions which do educational and medical work more than 5 crores need to get approval. So that condition continues, all right, but the scheme gets merged into 11 and 12 for purposes of understanding. The 1023C scheme used to be called the first scheme, first regime, and the 11, 12, 13 was called as the second regime. Now, there is nothing like first regime and second regime from 1/10/2024. So if somebody wants to set, if you get, and if you have an educational institution and it theoretically, if its registration was up to 30th September 2024, now it has to apply not under 1023C5 or 5A, 6 or 6A, but under section 12. All right. That is where they will go. So the government has now merged both the regimes of registrations or approvals that were earlier there. Please remember this. Now, before we move on to the new registration scheme and what changes are happening in that scheme, I will like to mention two landmark judgments of the Supreme Court which were given in 2022. That those are important. So I'm only giving you the summary of those judgments. The first one was in the case of New Noble Education Society, where the Supreme Court said that if you are pursuing, for instance, education, then it should be solely education. It should not be predominantly education. Exclusively your income should be from education. Now, your income from education, which is solely for your purpose, is education, is possible to do some commercial activity and to earn some markup, but you cannot do an activity like giving out your buses or giving out your hall or giving out your canteen. No, that canteen can be there and you can generate some income, but that is exclusively for the people who are studying there. is one condition, one judgment that was passed. The second was with relation to general public utility. Now, as I said, the general public utility concept was being misused, and a lot of commercial activity was happening under the garb of general public utility, and a lot of profit was also being earned, which again, as a commercial activity, was profit that should have got taxable. However, it was not taxable because the shelter was being taken under section 215, seventh limb, commercial activity. So the Supreme Court said, well, as long as the commercial activities for advancement of an object of general public utility, only to that extent or incidental to that object, only that will be permitted, not any commercial activity beyond that. That was in the Ahmedabad Urban Development Authority case, where the various authorities, and I mean, it was in terms of the cricket board and many areas, where they used to take advantage of general public utility and do so much profit and commercial activity, that the Supreme Court said, well, no, you can have some amount of markup. Again, the markup is not defined very clearly and therefore can go for litigation. But what was settled was that your commercial activity only can feed into the charitable work. It cannot be in addition to that. And so also in the education case, in the Noble Education case, they said solely your commercial activity solely for education. Okay, not anything beyond that. So please remember, when you are working, your commercial activity, if you undertake, has to be very clearly linked to your object, and there, that relationship or adjunctness or incidentality has to be proved by you, otherwise it will be treated as taxable. It can also cause your registration to be cancelled, because if the commercial activity is not incidental and is a pure business activity, that becomes a specified violation which can cause cancellation if it is recommended by the assessing officer. Now, coming to the new scheme of registration, and when I'm dealing with this scheme, although this scheme came into force in 2021 and a lot of you have got registered, but there's a lot of lack of understanding of what this is actually when I talk to people. So what happened was that earlier, prior to 2021, charitable institutions, once they got, their 1023C approval or 12AA registration or 80G approval, it was, for lifetime, unless it was cancelled, unless it was, cancelled subsequently. So there was perpetual registration or approval to that extent. In addition, the government did not have, the requisite information of how many registrations and approvals had been issued. So the government in 2021 came and said, well, the situation of perpetual registration has to stop, and the registrations and approvals will have to be for a period of 5 years. Regular registrations will have to be for a period of 5 years, and thereafter there has to be a renewal if once if for every 5 or 10 years. Okay, so it will be 5 years generally and 10 years for smaller NGOs. That's a change that has happened recently, but you will have to come for renewal. All right. So this is what is the biggest change that has happened as far as income tax law is concerned, which means no longer will we have a free situation where our registration, unless it is cancelled, will continue till eternity. Now, as far as the 2021 changes are concerned in the law, so I'm not going to, when I'm teaching you all this, I'm not referring too much to legislation or provisions or sections. Those are, as we go forward, mentioned in the PPT. But I am trying to explain to you in form of a story as to what the position is. Now, there are seven types of approvals or registrations that were brought in. Please remember, now if on the first sentence that you are seeing is 1023C, that 1023C has got merged with 12A. But the 35 section, ATG, all that remains. 35 is for research institutions. Okay. So the what were the approvals or approvals or registrations that were mandated? First was that all existing registered entities under 12AA or 1023C will have to re-register. So all of you who were having these registrations have registered and got your registration for a period of 5 years. Okay. And this period of 5 years is going to come to an end in assessment year 26-27, which means the registration is going to come to an end by March 2026. All right. So generally, people who had registration and were doing charitable work and were enjoying the income tax exemption, those institutions had to move and decide which section they will opt for and get themselves re-registered. All right. The second was unregistered entities. Unregistered means that you did not have a registration. So the government said even unregistered entities who have not claimed income tax exemption earlier under the income tax law can also get registered. Okay, that's the second situation. So you were not registered, you didn't have a 12AA or an ATG, but the government said, well, you can get registered as long as you did not take the benefit of income tax law as far as your income is concerned. The third is provisional registration, and this was a benefit that was given for new entities. So if I'm constituted or incorporated as a new entity and I go to the income tax authorities, they say, please start work and show us some work so that we can give you a registration. And that used to be a problem. So the new regime, the new registration scheme brought about provisional registration. Now, provisional registration means that you have just constituted yourself as a new entity, you can go straight away and opt for provisional registration. This provisional registration is available only for new entities. Okay. But you will get the income tax shelter for a period of 3 years. Now, once you have started charitable work, you will have to convert that provisional to normal or regular registration. Okay, and you will get a normal registration for a period of 3 years. So we will see some of these provisions more because there are changes there and I want to explain those changes to you. Especially people having provisional registration, you have to be very careful, because if you are thinking that your provisional registration is up to the end of the assessment year, you are mistaken. And many organizations who think that they have been given the registration for a period of 3 years, they have to go for conversion of their provisional to regular registration after 3 years and are already doing charitable work, they are in a problem. The next one is modification of object clause for 12A entities. Okay, so if you modify your object clause, then also you have to re-register within 30 days of making that modification of object clause, which is, something which is not consistent with the objects at the time when you register. If registration and approval earlier, what used to have, people used to get 1023C registration and also 12A registration. So now one of the registrations will become inoperative. So you'll have to decide which, you had to decide that time which of the sections you will have to now go in. This in a certain sense is inoperative now, because if you had both of them, you would have already selected and you are now registered. However, when the new registration scheme was there, so which means that you cannot be registered under two of these sections. Now, of course, the 1023C also has gone. So you have only 12A. So there is nothing like an inoperative uh, clause for one of these sections. All right. The last one is renewal of registration. And that is something that will come up in September 2025, just about less than 6 months from now. And you should prepare yourself for the renewal process, because the renewal process will be with inquiry. I don't know how much of that inquiry will happen, because once everybody is applying for renewal, how much, the establishment is there in the income tax, it is likely that as just like FCRA, when 2011 you got registered, and 2016 when renewal came, you got your renewal very easily. Only in 2021 the government said, well, due process of inquiry will be more rigorous. So I cannot say that, but what I am saying is that your renewal of your registration is coming. And if you do not apply on time, if you do not apply on time and the period is over and your registration ceases in on March 31st, 2026, uh, 26, then you will be just like another not a for profit entity, and you will be kicked out of the section 11 benefit. So it's so important to understand this particular part. Now I go to the to the two registrations that we are talking of, existing entities. So existing entities, if you have already got registered, very good. Okay. So the existing registered re-registration or approval under 1023C or 12A or ATG for existing registered entities, or for not registered entities and never claimed section 11 benefit, new entities. So there are this distinction that you must understand. New entities not commenced charitable work, not registered, already doing charitable work but not registered, existing registered, doing charitable work and also registered. Two more things that had come was the statement of donation and the certificate of donation, the receipt or donation certificate from under section 80G, both online from the portal. Now the forms that need to be understood, is the 10A form, which is your application form at the time of re-registration, at the time of provisional registration. That time you had filled form number 10A, and in that form 10A, in clause 5, you would have selected the charitable object that we saw in our first slide that you will pursue. Please go to your 10A, see clause 5, see that your consultant had just filled up that clause 5, or you had applied your mind to select the which of the 6 7 limbs that are most closely relevant to your charter and to your work, and make necessary corrections. Now 10AC is the approval form against your 10A. So the form 10AC is a standard uh, description of the form or the nomenclature for the form, but it can be for 1023C, it can be for ATG, it can be for 35, and it can be for 12A. You will have to see which subsection, which section, which clause that registration is pertaining to. So if you are generally a 12AB registered and an 80G registered, then your specific section under where you are registered will be mentioned in your 10AC form. The form number will be the same. Your form 10A will also be the same. You will have to select the right section code. The 10AB is registration of existing unregistered entities, okay, but who have not claimed income benefit of exemption. Second is conversion of provisional registration, okay, to regular registration. Renewal cases, change in objects, and of course the inoperative clause, selecting one of the two. All those cases have to be under in form 10AB. So when now you will go for renewal of your registration under 1012AB, or for your approval under 80G, you will have to select form number 10AB and file that before 30th September 2025. You will get your approval of 10AB in form 10AD. Okay. The last two forms are for your ATG. So for your ATG approval, you will now you have to, since 2022, 21 22 onwards, have to file a statement of donation in form 10BD, and you have been filing that. Okay. So that is something that you have to understand, that that is a statement that has to be filed for all donations with the on your portal using your credentials. and you will have to generate the 10BE from there, which is the donation receipt, and hand it over to your donors for being able to claim 80G benefit. Now, there is nothing like a manual receipt for 80G. And I still see a lot of people, arguing that we have issued a manual 80G receipt. What you can now issue is only the money receipt and say that we will issue you the 80G certificate after closure of 31st May of the next financial year, uh, in Form 10BE. And that is something that you should now say. Your receipt, that book that you had earlier, is no longer valid. Now coming to the existing registered. So now these are the previous slide. I only showed what is the coverage of the new scheme and what are the forms that are applicable. Please remember these forms because it's very, very important. So when you registered your an existing registered entity got re-registration, it filed form number 10A, and the form 10A was disposed of by the CIT. Earlier it was 3 months, now it is 6 months from the end of the concerned quarter. The CIT has to give you an approval. Now, please remember, when you re-register for the first time, there is no inquiry. It's instantly granted. It's instantly granted. Okay. Now, up to 30th of June 2024, okay, if existing registered entities had not re-registered, then they were given condonation through CBDT circulars from time to time. Post 1/7/2024 up to 30th September 2024, this window was not open. However, with effect from 1/10/2024, please remember, for condonation of delay in filing specific things under section 12A1AC, that is re-registration application. If you did not make re-registration application even up to 30th September, or you have, not applied for renewal if it was due, okay, uh, or you have not converted your provisional registration to regular registration, or you have made object modification but you have not re-registered, okay, then that condonation can now be given only when you will file an application to the PCIT or the CIT exemption. It's not just the application, it is also that you will have to show reasonable cause for delay. Why the delay was caused in not filing your re-registration application, your new registration for an existing unregistered entity, your renewal, and more importantly, your conversion of provisional to regular registration. Okay. So all those cases, the action will follow only once the CIT is convinced about the reasonable delay being justified. And therefore, it's very important that there is no blanket condonation now available. Now, as far as Form 10AB, for this you will have to file Form 10AB, and the condonation has been activated. The request for condonation has been activated in Form 10AB. So please remember that if you have not re-registered or you have not done the other things, then the only way available is to make a 10AB application as a petition to the CIT asking for condonation, and only once the condonation is given, your application will be proceeded with. Okay, so this is something which is a major thing that one has to understand. Now, as far as renewal of 12AB registrations and 80G of existing registered entities, now this is the thing that is now coming up. Okay, so the renewal will have to be in Form 10AB 6 months before the expiry of the assessment year up to which the re-registration has been granted. Okay, and this, as per the law, is after due process of inquiry. Now, all of you were, even if you had filed later than 22 financial year, you have been all given approvals until 26-27, because retrospectively you were given the benefit even due to condonation from 1/4/2021. So all 1/4/2021 comes up for renewal in on 31/3/26. Okay, so 6 months prior to 31/3/26 is 30th September cutoff. Before that, you will have to file Form 10AB for your 12AB registration renewal as well as your 1080G approval renewal. And you will have to file separate forms using separate section codes. Okay. Uh, so this is something that you have to be prepared with. Please look at your the 10AB template. See that you are on the right side, because with a process of due inquiry, the department can take an adverse view and can reject your renewal. So please go to your portal, see the proceedings, see is there anything major pending which you can still settle before you file your 10AB or before the matter comes up for renewal before the CIT. Okay, so this is very, very important. Now the renewal you will get in 10AD form. Okay, so the 10AC will no longer be valid post 31/3/2026. And you will get a Form AD, Form 10 AD renewal for a period of 5 years or 10 years. All right, 5 or 10 years. Now, what is this 5 or 10 years? Is the change that was made in the Finance Act of 2025, where the government said that small NGOs will be given renewal for a period of 10 years instead of 5 years. Small NGOs will be given renewal, okay, renewal for 10 years instead of 5 years. Now, what's a small NGO? A small NGO is defined as an NGO whose total income is up to 5 crores, is not less than, is up to 5 crores in the previous 2 years preceding the year in which the application for renewal has been made. So the preceding 2 years for the year in which your application is being made in 25/26. So in 23/24 and 24/25, if your income is up to 5 crores, then your 10AB form that you will file, your 12AB registration and your 80G approval will be for a period of 10 years. Okay. For this is not applicable for uh, this is sorry this is applicable only for 12AB. Sorry, very sorry. So it's applicable only for the 10 years condition is for 12AB registration. It's not available still for 80G. I mean, we don't really know, but the consequential amendment has not been made in 80G in terms of this small NGOs. So again, reiterating that the small NGOs will get 12AB registration for 10 years, but your 80G approval will be for 5 years only. Okay. Uh, Again, provisional registration to normal registration or registration of unregistered entities, the approval will be for 5 years only. Okay, there is no change there. So if your provisional registration you had is converted into a regular registration, it will be for 5 years. If you are doing a registration of an existing charitable institution which is unregistered and has not claimed exemption, then again it is 5 years. So please remember that your 12AB registration, if your income is less than 5 years in 2 years preceding the year in which the application is made, your approval will be for 10 years. This is only as an accommodation for smaller NGOs. However, no consequential change has been made in 80G for even if it is less than is up to 5 crores, the the 80G approval will be only for 5 years as of now. Now, coming to the provisional registration, which is very, very important for people who started their charitable organizations. So, it's applicable for the assessment year relevant to the previous year for which it was the application has been made. Now, what has changed here, okay, is that if you are an existing charitable institution, doing charitable work, you cannot go for provisional registration. That route is closed. Okay. Uh, this is available only when you have not commenced charitable activity. And that confirmation will also be mentioned in your Form 10A. What is the meaning of not commenced charitable activity? In layman language, it means that you have not started spending a rupee on charitable work. You have got your constitution, but you have not spent any money on charitable activity. You will have the provisional registration route available to you. Okay. So there is again no questions asked, no inquiry, no nothing, and you will be given a provisional registration for 3 years. Okay. Remember, this provisional registration will be for 3 assessment years. Now, the catch is that once you have started your charitable activity, the 3 year condition is if you have not started charitable activity. If you did not start your charitable activity for 3 years, then 6 months prior to 3 years, you will have to again apply for provisional registration. Okay, that is the condition. But the bigger condition is that if you have commenced your charitable work, then you will have to apply in Form 10AB for conversion of your provisional registration to regular registration within 6 months of commencement of charitable activity. And that is where many organizations and consultants have actually defaulted, which means they thought that the provisional registration was valid up to the 3 assessment years, but the condition was or within 6 months of commencement, whichever is earlier. Now, this is something that had got forgotten. Now, if you want, so in that sense, your provisional registration is no longer valid unless you are able to now apply in 10AB and go in for condonation and your provisional registration is restored. I mean, restored for conversion to regular registration from the date on which the 6 months had elapsed. So this is one very important point that people who have 3 years assessment year provisional registration must know. And I know a lot of small NGOs who have not complied with this particular provision. And the route is now solely open through the condonation route. Okay. With effect from 1/10/2024, provided you are able to give reasonable cause for delay. Now, you know what it means when you have to now go for condonation and you have to now go and exhibit or prove cause for delay. You know what that means. Now, for conversion to regular registration, Form 10AB, that will be through a due process of inquiry. So if you have started your work and you have converted, then it's actually 10AB form and there is an inquiry. So the CIT will check and will give you a regular registration. That regular registration, even though you are a small NGO, will be for 5 years. Only next renewal, if it is up to 5 crores, will be 10 years. Now, the current law does not have any provision about the completion of 3 years and no activity started, which is now being brought into the ITB 2025. But anyway, don't have to bother. The major problem is that if you have commenced charitable work, your 3 year is not relevant. What is relevant is 6 months from commencement of charitable work, you had to file 10AB form. This is your 12A1 AC condition. All right. I don't want to confuse you with that. I want to explain to you the provision. Are you compliant with the provision of the law? The sections and the subsections and clauses is immaterial. So that is something that you have to be very careful about. Now, before I move to, other provisions relating to ATG, which is the 10AB, 10BD and BE, I want to introduce two concepts here. One is what is called as exit tax or accreted tax or accreted income tax. Now, this is very relevant for not-for-profit organizations to understand. what is accreted income? Okay. Now, and when will the exit tax or accredited income tax get, you know, uh, triggered? When will it get triggered? This is called Section 115 TD. Okay. Now, first of all, let's understand that accredited income is income. It's not earned income, but it is the excess of the fair market value of your assets over your liabilities. So that's actually not your income. It's basically your asset, which is being now considered as income, because the income was not taxed when the asset was created. And therefore, when the exit tax has to be imposed, it has to be imposed on the value of the excess market value of the asset, not on income. So you will see that the taxation is actually indirectly on the asset, directly on the asset and indirectly on the income. When will the exit tax kick in? That is very important to understand. So, if you have assets and asset valuations are very heavy, you cannot afford to allow a trigger as far as, 115 TD or exit tax is concerned. And this exit tax is very much a part of the chapter related to not for profits in the new income tax bill. If your 12AB registration is cancelled, okay, for violation, so this is a positive punitive action that the department has taken and it is cancelled. Uh, Besides cancellation, the newly introduced situation is that if you have not registered, okay, you were a registered entity, but you have non-re-registration. If you have not renewed, the same condition will come as cancellation. If you have not converted your provisional to regular registration, with effect from 1/10/24, all these conditions will also attract exit tax, not just cancellation, but non-renewal, non-re-registration, non-conversion of provisional to regular registration also will come within the ambit of 715 TD. So if any of these triggers are there, then your market value of your asset you will have to calculate, reduce the liability, and on that amount, the maximum marginal rate of taxation will be applicable. Okay, please remember the maximum marginal rate of taxation. That is on margin 30% plus your surcharge per year plus your education and cess. That entire thing might work out to somewhere around 47 odd percent. So what we are saying is that you cannot afford your cancellation of your registration, which means you must understand what are the provisions. You cannot not have your registration not renewed. You cannot not re-register. You cannot convert your provisional to regular registration and continue to get the benefit of 11. No, you will be kicked out, as well as the provision of section 115 TD will be applicable. If you have modified your objects and not applied for re-registration, and the objects are not in line with the conditions of registration, and the application has been rejected. So if you have applied for modification of your object clause, which are not in line with your objects when you registered initially, and the application has been rejected, again the same condition. If you have merged into an entity which is not a 12AB entity, this is basically a for-profit entity, then this tax will come in. If you have dissolved yourself and within 12 months you have not transferred the assets to another 12AB entity, currently 12AB now, then also this tax will come in. Okay, so what I'm trying to say is that all these are conditions which you should know, and you cannot allow your organization to get into these conditions. So you will lose your income tax exemption status is one thing. And I can tell you, more than the FCRA registration, losing your section 11, currently section 11 exemption benefit means that you are totally out of business. You are completely out of business. Okay. And you know, there are several laws where, if you're not exempted, you just cannot do business. And you cannot do business as a for profit entity, because, still the not for profit entity and the privileges of the not for profit entities is what is recognized for purposes of charity. All right. Now, uh, so when can the registration be cancelled? Now, there is something called specified violation, which has been introduced, I think, from from 2022. These are the conditions which can lead to your cancellation. If you spend income for other than your object, therefore, I keep saying, please look at your object. Please look at your object in your 10A. Please look at your object in your charter. Please look at your object in your FCRA. Everything has to be in line, aligned with your, in all these documents with your object. So anything which is other than your object, cancellation. If you have business income which is not incidental and no separate books have been kept, then also, which means commercial receipts, as long as they are adjunct to the object, is okay, and also compliances in terms of separate books. But if they are not adjunct, then that is a cause for cancellation. If you have a private religious purpose, if you are benefiting any particular community or caste, definitely you cannot, because you have to be a public institution at large. So if you started as public institution and you've squeezed your work to become like this, then also cancellation. Violation of other laws which affect the achievement of the objective. It's becoming very important now. So I keep saying, please just don't think that you comply with the income tax law is all right. You have to comply with all other laws which are instrumental in achievement of the objective. If you are giving any benefits to a specified person, which is not reasonable. So we'll see section 13, and what is a specified person? People who are, I mean, in very layman's language, people who matter in the organization and can misuse the organization because of not being at arm's length are people who are called specified persons. So we will see section 13 and what the provisions are. So if you are giving those benefits which are unreasonable benefits, then also cancellation. If you have not made investment in specified modes that is provided in section 11.5, then also we will see what section 11.5 are. What are those incomes or capital which needs to be put in section 11.5? Not very difficult to understand, but we must know what section 11.5 is. Conditions not complied in the registration certificate. So I'm going to show you in 2 slides what are the conditions that are mentioned in your form 10AC. Now, most people whom I talk to have no clue that in our 10AC there are 2 more pages after the first page. And the terms and conditions are mentioned there, which say that if you do not comply with that, that's a specified violation. Okay, so the matter will be referred by the SSM officer to CIT, and there is a certain procedure. It can be both revoked as well as cancelled. Okay, so one has to be very careful for such situations, and I have put them down all of you, all for all of you to understand that you do not, that this cannot get triggered. And if there is cancellation, then the exit tax will get triggered in addition to other triggers that I have already mentioned. All right, very important to understand this. Now I come to the conditions of registration, and we will see what are the conditions that have been mentioned in our 10AC certificate. So for 12AB, there will be separate set of conditions. For 80G, there will be separate set of conditions. Right now, we are talking about the 12AB registration certificate. If you have not seen your 10AC certificate, please go today and see your 10AC certificate and understand what that 10AC certificate is. So donors will say, give us your form 10AC certificate. Sometimes I've seen people giving 10AC certificate for 80G instead of 12A because they don't even see the section code under which the 10AC is actually being issued. There's no understanding actually, and there is no intention to understand. That is what. Now, this is what we are studying is not rocket science, but it is so core to the work that we are doing and have done for years and years and will do for years and years. So if we have to be in this sector to have a good understanding of all this is going to be of great immense use. And you cannot get this in this simple language. So if you have more technical sessions by people who are for the professional community at large, probably you will not even understand what they are discussing. So I've tried to water it down in such a way that you understand what I'm trying to tell you in the simplest of language without confusing you with sections. Now, if you alter your objects, it will be with prior approval of CIT. This we have already seen. Okay. And will be effective only after approval. So we had seen modification of objects. This is what is mentioned. अब आपने अपने objects modify कर लिए. Once you go back and the CIT asks you for your MOA, and the MOA has objects which are different and not even related to the objects at the time when you got registered, sure you can be he can cancel your registration, or he can dispose of your renewal application as saying that you are not fit for being renewed. Okay, so please remember this, that when you change your object, which is different from the objects at the time when you registered, now this is the present position. In the income tax bill 2025, they say, even if they are not, whether they are, who's doing this, who's putting this dot and cross and everything on this? If that person, please leave this meeting. I don't want people who are attending for the sake of attending. I am not interested. You can leave the meeting. I don't mind. So what we had seen is that in IT, in the income tax bill, what they are making even more complicated. They are saying if the objects, even if they were similar to the objects, if there's a single change of object, again you will have to re-register. So on dissolution, your surplus assets with similar object, okay, that we have already seen in the previous slide, that if you dissolve yourself, so every organization in its rules, in its trust deed, must have the dissolution clause, because the income tax department will ask this time at the time of renewal, do you have a dissolution clause? When what does that dissolution clause say? Is it consistent with the income tax provisions or the terms and conditions on which we issued you the registration? And you will find there is no dissolution clause in my this thing. So they're going to ask you to go back, amend your rules, and come back after amendment and filing with the regulatory authority. So start working. Merged or converted to a non-charitable entity that we have already seen. If you are, that is with will attract 115 TD. Not only will you lose your cancellation, but you will be paying maximum marginal rate of tax on the value of your assets, not value of your income. So suppose your value of your assets, market value of your assets was 10 crores because your book value was 2 crores, but your market value when you got it valued is 10 crores and your liabilities is 1 crore. 9 crores you will have to pay maximum marginal rate of tax. That much money you will not have in bank. You will have to sell that asset to be able to, pay the exit tax. So remember, this kind of situation can come, and the department can make it. And up to now, 115 TD was very liberally, was not being used because it is a very dangerous section. But again and again, the income tax department is making a mention of 115 TD in various sections now, which means at some point of time, this will become a reality. 12 AB registration. So I'm reading out the terms and conditions of 12 AB registration as mentioned in conditions as mentioned in your form 10 AC. The 12 AB registration does not mean automatic 80G approval. Separate 10 AC form has to be obtained. 12 AB as AB registration subject to fulfill. So if you are a 12 AB registered entity, will you automatically get 11 and 12 benefit? No, you will have to abide by the conditions of section 11 and 12, and that we will see. So please remember that if you are registered also under Income Tax Act, every benefit is conditional. It is not unconditional. It's not like agricultural income is unconditionally exempt. It's not like that. You have only got an entry or a gate pass to getting the benefit of chapter 3, that is section 11 and 12. But you will now have to fulfill the conditions that are there in 11 and 12 to be able to get the benefit of exemption. Change in constitution document should not result in questioning of your charitable status. Very simple. Moving on, maintain accounts, separate accounts for incidental business and file your ITR. This is also part of your 10AC. So you'll have to do all this. And if you do not, then there are provisions that kick in under 13, 10, and 11. Change of registered office outside the jurisdictional CIT, then you'll have to get prior approval. Registration cancelled if activities are not genuine, not as per object, or registration obtained fraudulently. Why? Because when you are given this 10AC, it is automatically granted. That is why they have mentioned no benefit under section 197 basis your 12 AB registration. So the section 197 is, we will see that in the next session, is for non-deduction of TDS on your income, essentially. Okay. So that benefit you will not get if you have 12 AB registration. You will have to get specific approval under 197 to be able. Suppose you get interest income, so will your interest income be not taxable by the bank? Will the bank not charge you any TDS? No, it will charge you TDS, although your income is exempt, but the TDS provision will kick in. The TDS provision will not kick in or will kick in concessionally only when you have section 197 approval for that particular financial year. Voluntary, the contribution, we what we call grants and donations in income tax is voluntary contribution. Now those should come through bank account, and the numbers has to be mentioned, should be with the CIT. So basically we mention it in our ITR. Entity to, so please ensure that all bank account details are mentioned in the ITR every time, for every year that you file. Entity to comply with provisions of Income Tax Act and rules is a general statement. It says, the last point says, we have given you this 12 AV registration. Is instantly we have granted it to you. Later on, if we find that information is false, okay, not information not complete has been deleted. So earlier, if the information was incomplete, then also it could be then it was deemed that this registration was not granted. But now they have made it slightly more liberal. They have said if it is found that the information is false, then your 10AC certificate will automatically cease to exist as though it was never issued. So please remember that whatever information you gave in 10A and subsequently in your compliances should not question the registration certificate itself. Otherwise, the department will not take even 2 minutes to withdraw this 10AC registration. I now come to what are the conditions as far as 80G approval is concerned in the 10AC certificate. So it says if you are making any changes in the bylaws, it should be, by competent authority and should be intimated to the department. Second is any changes in trustees or addresses should also be intimated to the department. Third is that you should maintain books of accounts as prescribed and get them audited and also file the return, which is the point number F. Then you have to give certificate of donation in form 10BE. So when you read your 80G certificate, it is clearly mentioned that you have to give a certificate of donation in form 10BE. This is your compliance. No cess or fee, which is violation of 215, which means commercial receipts. It's not permitted. Then it says that whatever donations you get, first of all, this will be granted, this has been granted if you are established in India for charitable purpose. Okay. Uh, Fulfills conditions of section 80G subsection 5. There are certain conditions: maintaining books of accounts or date, filing returns and things like that. And the religious expenditure should not be more than 5% of the total amount of expenditure. So you have religious come charitable institutions which are recognized, which where the religious component cannot be more than 5% of the total. That's the condition under ATG 5B. So all those conditions will have to be fulfilled. It says that your voluntary contribution cannot be for business purposes, and you will have to state that in your 10BE. All right, this is the point number H that I have mentioned. The I point number is the same as we saw last point for 12AB, which says that if this is instantly granted, if we find that there is any false information, if there is incomplete information, then it will not, it's no longer, that is a specified kind of a ground for withdrawing the 10AC or ATG approval. But if there is false information, it will be deemed as not having been granted. So one has to very clearly understand. Please remember that the charitable work, the money has to be spent in India for charitable purposes, or you will have to get approval. Otherwise, that will not be considered as application. In fact, that will be considered as a violation. Now I come to another point before I go to section 11, 12, and 13, which is the code of taxation. This is what is called as anonymous donation, section 115 BBC. This is applicable not to a religious institution or a religious come charitable institution. It's not applicable if it doesn't, for activities which are not in the nature of educational or medical institution. If these are the two conditions, the two situations, then anonymous donation is not applicable, because it is considered that anonymous religious institution will get anonymous donation. The religious come charitable institution, except for medical and if they are running medical and educational institution as part of their religious come charitable institution, they cannot get anonymous donation. But for others, you can get anonymous donation. They will not be covered. However, this category of religious come charitable institution for anonymous donation purpose is being deleted from the income tax bill. So only anonymous donation benefit or non-applicability of anonymous donation clause section 115 BBC will not be applicable now onwards after the new bill, only for religious institutions. Okay. What is anonymous? Anonymous means that when you get money, if the name and address of the donor is not known, then it is anonymous donation. If you don't know the name and address of the donor, now if you have a PAN, if you get it from the banking channel, then somehow or the other you should be able to. But if you have no way of knowing the name and address of the donor, that purely is anonymous donation. Now, if you get anonymous donation, can you get anonymous donation? Yes, you can get anonymous donation as a charitable institution. Of course, as a religious institution, you get anonymous donation only, mostly. Now, the provision for anonymous donation is that your total anonymous donation in a financial year cannot be more than 5% of your total donation, or rupees 1 lakh, whichever is higher. That is the threshold. 1 lakh or 5% of total donation, whichever is higher. If it is more than that, then it will become taxable at the rate of 30%. So one has to be very careful about when do you cross the threshold for anonymous donation. It is also important that you file your complete 10BD form, because if you, it is likely that the department may say based on your ITR and your income that you have filed, and the difference between the 10 BD total and your income, if it is, it can be interpreted as anonymous donation. So whenever you are filing your statement of donation, all donations should be correctly and completely accounted for, so that only the difference between the 10 BD total and the income in the ITR, only that would then become anonymous donation. Okay, so one has to be very, very clear about this. Now, so we go to the statement of donation, ATG. We know all of us, and I just want to, do it as a kind of a uh, trying to just redo it. So the cash donations up to rupees 2 lakh or 2000 is permissible. More than 2, it's not eligible for cash donation. More than 2K is not eligible for ATG benefit. No donation in kind has ATG. It should be through banking channels. No anonymous donation, as we already know, anonymous donation, you cannot issue ATG. ATG deduction, again, we know that the deduction is mainly for the donor. So it can be 100% or 50%, depending upon, what is the, who's receiving it, with or without specifying limits, that is subject to 10% of the adjusted gross taxable income. So this you have to see that the donor has to see what is the adjusted gross total income, only 10% of there, that the the benefit can be 100% or 50%, and that has been specified. But donations to charitable institutions, okay, for ATG purposes, falls under 50% and with using the qualifying limit of 10% of adjusted gross taxable income. You have for scientific research and rural development projects or institutions, the donation is covered under ATGGA, which is 100% for the donation. Okay, but that is only for scientific, statistical research and rural development projects, that is covered under ATGGA. All others, so if that's a scientific research institution set up under Section 35 of the Income Tax Act, then you can claim 100% deduction uh, under ATGGA. Now, as far as the AT, so this is broadly about ATG benefit to the donor essentially, just for you to know. Now, for the donation, statement of donation has to be in Form 10BD. Now, what all? So you should be approved under ATG, then only you can file a 10BD. So if you're not approved under ATG, automatically 10BD is not filing, not be filed, because you have to give your unique registration number under the under ATG to be able to submit the Form 10BD. And if you cannot submit Form 10BD, you cannot give 10BE. If you cannot, then that person who has given donation to you will not be able to get benefit of ATG. Simple. Now, you have to please have a look at the statement of donation, especially part B, and prepare your information as throughout the year as you get donations. So what you have to report is donation type. Is it corpus? Is it specific grant? Specific grant means that it is for a specific project. And C is others where there is no specificity, which means that it can be used any which ways. That's how the interpretation is. So those are the three codes that have been mentioned. You'll have to select what is the type of donation. The UIN of the donor, and therefore you please remember to get the unique identification number of the donor, PAN, Aadhaar, or if there are no, if the PAN Aadhaar is not there, the tax identification number if it's a foreign entity, okay. Then there are several others that I am not repeating. Mode of receipt. Now, please remember that in 10BD, while we say ATG benefit is not available for kind or for more than 2K, the reporting has to be done for cash, kind, and proper and normal banking channel. So you will have to say what is the mode of receipt. As far as kind is concerned, that will be based on the notional value or the nearest market notional value of that asset that you will have to assert, of that asset or that goods that you'll have to ascertain. And in your income computation, you will have to do the pass through entry where you take it as income, and as well as you the same amount is a contra entry so that the net effect is zero. The 10BD is to be filed by 31st May for each financial year, and there is fee and penalty for late filing. It can be, revised after filing any number of times also. Now, I want to make a mention here that if you have, uh, so please remember that if you are uh, if you are a registered entity, and if you have not got condonation for delay, you will never be able to register. Okay, if you were a registered entity as 12AA, and if you uh, because you are a charitable institution and you did not get condonation of delay, you will never be able to get the benefit of 12 of section 11. However, the government has provided for a relaxation for ATG. I don't know why this distinction, but anyway, it says that if you are a charitable institution, which means that you are a 12AB registered institution, but you are doing charitable work, then you can now file ATG approval. Okay, which is not possible for 12AB. That is what I'm trying to say. So the approval can be applied even if charitable status benefit is taken, which was not the case earlier. This is effective from 1/10/2024. So which means that if you are a charitable institution and you are holding a 12AB registration, in the earlier dispensation, ATG approval was not possible, which is now possible, and you can get your ATG approval even though you are doing charitable activity. Okay, it will be valid from the time when it is issued. So you will have to actually, since you are already doing charitable work, you might have to go for regular registration under ATG. Now, section 80 10BE is the form 10BE is your certificate of donation. Again, the 31st May, it's linked to the UIN of the donor. Penalty for delay, again, same conditions as for 10BD. You'll have to download it from your portal and share it with uh, the donor, and the donor will take advantage by inserting the number of the issue number, the uh, for issued for the 10BE while filing its income tax return. If they do not get this 10BE, even if they have donated to a ATG institution and the ATG institution has not filed 10BD, they will never be able to get the ATG benefit. Now I come to the chapter number 3, which talks about three particular sections, which is the code of taxation or income tax for not-for-profit organizations. Okay, everybody should know this. Our incomes are exempt from taxation if we are registered, but we have to comply with these three sections and the conditions of these three sections to get the privilege of exemption. We have been given a privilege under chapter 3, but that privilege is not automatic. That privilege has to be exercised by following the conditions. What are those conditions? And I take you very simply through the sections. So we are doing section 11 at this stage. That's the section which says income from the property held under the trust will not be liable for taxation, not to be considered under total income for taxation purposes. Okay, that income that you have generated, that you have got during the year, will not be included in the total income of that person or that institution, provided one, it is used for charitable or religious purposes. Second, it is applied for such purposes in India. Okay, so if you apply the income for purposes outside India, the benefit is lost unless you get approval. And to the extent to which 85% of that income has to be spent. Okay. So you can set aside or accumulate up to 15% of that total income. What does it mean indirectly? That 85% of that income you have to spend. So the section 11 says whatever income you got, 100 rupees you got, we can allow you to set aside 15 rupees out of that, and that will also not be part of your total income for purposes of computation of tax. So why this has been given is because the government feels that you need some money for besides doing projects, you need for your own sustainability, you need some money as general fund or free reserves for some difficult situation. Therefore 15 rupees you set aside, we will not ask any question. You don't, whether you spend it or you don't spend it, you have to set it aside. And up to now, there is no mandatory condition that it has to be in section 11.5 modes of investment. However, in the income tax bill, this setting aside of the income of 15%, which is called as deemed accumulated income under the ITB, you will have to put that also in section 11.4, 11.5 modes of investment. Got it? So your income will not be income for purposes of computation and will be exempt if it is used for charitable purpose and in India, and 15% can be set aside. Now please remember that section 11 also says that corpus will not be considered as income. What is corpus? A corpus is a specific direction by the donor that you use it as to be used as corpus. Okay. And provided it is deposited in section 11.5 modes of investment. This was introduced later on in 2021, that corpus has to be invested in section 11.5 modes of investment. Only then it will not be treated as income but will be treated as capital. Corpus means that you get a lump sum amount which a donor has given you and has also given you the freedom to use the corpus. Use the income of the corpus, not the corpus itself. So the corpus you will have to keep as a liability on your liability side in your balance sheet, and the income will be treated as, will be considered as income for purposes of computation, and that income you use for the purpose for which you want to use it. There is no restriction as such on that use. When you get voluntary contribution in the nature of specific grants, there is a restriction. That's called a restricted fund. The income from corpus is unrestricted fund because there is no restriction imposed by the donor. The only restriction might be that, well, the corpus itself should not be liquidated without our approval. Because the idea of corpus is to have a lump sum from which income can be generated so that the trust can meet its expenditure which otherwise will not be provided by donors. Okay. Now, so we understand what conditions have to be followed for this income not to be included in the total income for purposes of taxation. Now the question is, if I have not spent 85% of my income, I said 15 rupees out of 100 rupees you can set aside, but 85 rupees you have to spend. Suppose I have not spent 85 rupees, will, and I have spent say 70 rupees. Will the 15 rupees be taxable? Here also the government has been liberal and says no, as long as you again follow certain conditions. So there are two options that are available when you do not apply 85% of the income. Now the word expenditure is not expenditure but payment in the sense of the cash payment, the cash versus accrual. So the not expenditure, but application means payments actually made during that financial year. And that word that they use in the income tax is income and application. Now, if your application is less than 85 rupees out of 100 rupees, say it is 70 rupees, what are the two options that are available? One is this: for this 15 rupees, you have two options out of which you can choose. One is what is called as deemed application. So the money came at the end of the year, or the money just didn't come because it accrued. Suppose you invested your money in FD and the money will come after 2 years, 3 years. So, but you'll have to report it as income, or you got income in the month of March which cannot be spent, or for any other reason that has not been specified. You can carry forward that unutilized, application for 1 year, and that will be considered as deemed application. However, you will have to apply that in the next year. For carrying forward that without taxation, you will have to file form number 9A, okay, within time. So the condition is not only fulfilling condition, but is also fulfilling the condition in terms of time frame for applying. And that's very important. Otherwise, you will again lose the benefit of exemption. Now, uh, you can use the money that you have used parked as deemed application for inter-charity donation. For inter-charity donation, you can park it. Okay, and you can use it. You can use current year's income for inter-charity donation. You can also use the deemed application for inter-charity donation. This is the first option. So if you think that the money will be utilized in the next year, you have this option. This option you will have to decide, not your consultant. And for that, the Form 9A has to be filed online in time. The second thing is accumulation. So deemed application means you can treat that as application. It is deemed because it will be applied next year, but we will give you the deeming benefit, and therefore deemed application. Please remember, the deemed application facility is withdrawn in the income tax bill 2025. Okay, so we'll see that. But as I am moving with the presentations, I also just want to give you that flavor so that people who understand can immediately relate to what I'm saying. So you will therefore, for any accumulation now, not be able to do inter-charity donation. Inter-charity donation only for the income during that year, and you will get benefit of 85%. Okay, for inter-charity donation. Now, accumulation, what are the conditions? So accumulation, I thought I got money, say I got 1,000 rupees, and those 1,000 rupees I will spend in the next 4 years because the money will be spent in tranches, but I got the money. So I can then opt for accumulation for a period of up to 5 years. Up to 5 years. Fifth year, if I don't spend, it will be taxable in the fifth year itself, not in the sixth year. What are the other conditions? That you will have to file a form which is called form number 10. Just as in deemed application, you had form 9A, you will have to file form 10. Give details of what will be the application, what will be the amount or purpose for which that amount accumulated will be spent. Now the income tax, earlier there was no such change. Now the repurposing of the objective has also been permitted. Okay, this form number 10 has to be filed in time. Okay, and one thing that I just want to say is that the accumulation that you have done, you cannot do inter-charity donation. Okay, uh, and second, that the amount of accumulation has to be invested in section 11.5 modes of investment. So with accumulation, there are two conditions, very, very strict. One, that you cannot uh, give inter-charity donation. What is inter-charity donation? That I cannot give this money to another 12A entity for implementation. That means that, and that will effectively be the case in the new income tax bill. No inter-charity donation from shortfall in 85% application. But right now, deemed application provision, inter-charity donation is permissible. In accumulation, inter-charity donation not possible. Although I know a lot of people who have accumulated, done inter-charity donation and still have got their assessment done because the departments people are not fully educated. And the second thing is that you have to invest that in 11.5 modes of investment. Otherwise, your accumulation benefit will be withdrawn or rejected and that income will be taxable. Please remember that. Section 10, Form 10 in time, specifying the purpose for which that has to be done. Now, the accumulation will be the only route available without having to specify purpose under the income tax bill. Now, this is what is called as accumulation. So, 100 rupees, I spent 70 instead of 85. This 15 rupees, I have these two options, but I will have to exercise the options of deemed application or accumulation. Now, we talked about incidental business income. So, Section 11 has this provision for business income. Now, if the trust has property, okay, uh, which is generating business, then if it is incidental, then it is all right. But if it is generating business income which is not related to the object, then it may not be treated as part of total income for section 11 and can be taxable, or it can also lead to a cancellation situation. One has to be very clear. However, where the business income or commercial receipt is incidental or adjunct to our object, two conditions have to be fulfilled, which is section 11.4a. One, you will have to see that it is incidental. You can read 11.4a. Okay, being profits and gains of business unless the business is incidental to the attainment of object number one, and that you have maintained separate books of accounts for such business income, and you have also reported that in your 10B audit report and your ITR. So is business commercial receipts a no-no? No, it is not a no-no. Commercial receipts which are not related to the object for which the charitable institution is in existence is not allowed. However, if you are doing an object of yoga and you are selling mats or you are selling books or you are, you know, things like that, or if you are an education institution and you are selling books through your stationery shop to your children, but not to general public at large, because that is something that has been settled not predominantly but exclusively and solely is what you have to follow. Then that incidental business income is incidental business income. It's not pure commercial income, business income. That distinction has to be understood, and separate books between your charitable work and such business income has to be prepared. Now I come to section 11.5 modes of investment. I don't want to read them. What I want to tell you is section 11.5 mode of investment is very important for corpus. So when you have a corpus, that should be deposited in 11.5 modes of investment. Second is when you have accumulation under section 11.2, which is for 5 years, that has to be in modes of investment. The modes of investment are very many. So generally we are following by default automatically the modes of investment, like savings bank account or any, deposit with fixed deposit or savings bank balances. So you can read all this. Even deposits and investment in immovable property is also 11.5 modes of investment. And in 2018, more items were added. So mutual funds, investment in units of any scheme, Any scheme means not restricted to equity or debt or whatever. Any scheme of mutual fund is also 11.5. So your corpus can be invested there. Your accumulation can be invested there. Uh, Low cost housing, sovereign gold bonds, infrastructure, debt instruments of infrastructure companies, National Skill Development Corporation and depositories if they are, issuing shares. So that is all permitted now as also modes of investment under Section 11.5. Now, these are examples where I have just shown you the benefit of non-taxability if you have deemed application and accumulation, which you can read. Now, two sections is what I will like to mention here before we proceed, which you must know and are now applicable to charitable institution. One is that your cash payment to a particular person in a particular day cannot be more than 10,000 rupees. Okay, so that is something that you have to ensure. You have to ensure that your payment to a particular person in a particular day is not more than 10,000 rupees. Otherwise, that amount will be disallowed as application and will be taxable at the rate of 30%. Okay, so when you are making any cash payment, you have to be very careful. I suggest cash payments slowly. Many organizations have, brought it down. I suggest it should be made zero given the banking channels and options that are available. If you try, you can make it zero. I can tell you that. But you'll have to make a very concerted effort. So this is 40A3, which says that, and this is something that you will have to report in your ITR also, that have you violated the condition of 40A3 in terms of making payment of more than 10,000 rupees in a day to a single person, that entire amount will be disallowed. So also are conditions related to deduction of TDS. And this is one section 40AIA where not for profits not only are not complying with TDS registration and getting a TAN, but also not complying with deducting of tax TDS. Since many of them are on cash basis, they don't even know when to deduct TDS. So the provision here says that if you are short deducting or non-deducting TDS, which is otherwise, leviable under the provisions of Chapter 17 of the Income Tax Act, so 194C, 194J, whatever, then 30% of that amount will be non-tax or will not be treated as application and will be liable for taxation. So suppose you made a payment of 100 rupees to a person and that was for, say, professional services, and that 100 rupees was taxable. I'm talking of theoretical 100 rupees. Then in that case, the current rate of threshold for 194J is 50,000 rupees. Okay. So if it is beyond 50,000 rupees, okay, so then 30% of beyond that, if you have made payment without TDS or short TDS, then 30% of such expenditure will not be considered as application and will be taxable at 30%. So these two conditions, your account staff, your people should know that not dealing in cash and deducting TDS on time. Wherever you are following the cash basis accounting, please move to accrual basis so that you then can see ledgers of parties and see when the threshold for TDS has got crossed and deduct and deposit TDS and comply with the provisions of Chapter 17. We will see TDS in the next session. Here is an example where while you are not liable to taxation, but because you defaulted on 40A3 and 40AIA, therefore there is taxation. Otherwise, on computation, there was no problem. Now, we move from 11 to 12, and in 12, the section 12 is very simple. It only has provisions when you can get the eligibility for 11. So I'll go into this rather than just talk about any of these. We have crossed our time. So I would then suggest that we do this in the next session, although we are, trailing, but I will like to make it up. I will therefore suggest that we will carry on with the remaining presentation in the next session and do session number 2. Um, I will try to, accommodate that because we have already run 2 hours, and I think continuing with this might actually drag drag you too much more than what is required. So what I'm going to actually do is pause here and stop here for today's presentation, and go on to the session relating to, the period relating to uh, questions. Now I'm seeing the chat. Can we have a clause on receipt that 15% of any donation will be treated as, no, no, 15% of any donation cannot be treated as corpus. It will be treated as general fund. That amount that you set aside is general fund, not corpus. You can call it capital fund, you can call it general fund. That's the best way of deciding it. The problem is that the nomenclature is not still standardized. What we suggest is that it should be treated as general fund. This 15% excess, if you are earmarking it, you can also call it designated fund. If we collect refundable deposit and for some reason forfeited, refundable deposits will be a liability. So you will have to actually pay it back. It will not be a donation. You have a refundable deposit, which is basically should be reflected in liability and should be returned if that is the case. Then it will be treated from the balance sheet rather than from IND.
I'm sorry. I'm sorry. The question is that, if the deposit has been forfeited for because they have not complied with the conditions, if the deposit has been forfeited,
Then you will have to report it as miscellaneous income.
okay, whether that will be taxable?
Exactly.
Okay, thank you.
It will be taxable. It will be part of income, for income, not taxable, not taxable
O-
directly. It will be treated as
Okay,
miscellaneous income in your IND, and the
okay.
taxability or otherwise will depend upon what is the surplus of income over expenditure. And even if you have surplus of income where 85% has not been spent, you still have the two options, na Ramakrishna?
Yes, sir. Okay.
Recording, that is all right. Donation type, what is corpus? So Rahul Solanki is saying corpus. So corpus, charitable institutions get, we are not going to do any chapter on grant management and types of income or funds. That's not possible. But what I'm trying to tell you is that the funds that or incomes that the monies that charitable institution get are broadly restricted and unrestricted. Restricted is what you understand as grants, okay? Specific grants that have restriction in terms of how it will be utilized. Then on the donation side or the unrestricted side, there is nothing like a restriction on the money that you can utilize as a revenue. But if the money is not revenue, but is specified as a corpus, it has to be specified by the donor, then it will be reflected as a capital. And that will be deposited as an investment and will generate income, and that income can be spent for the objectives of that organization, again to be decided by management. Okay, that is what it is. If any trust giving donation and if they are paying from their 85% or not, how can we verify or if they are paying from their? Monica, I can't understand the question actually. Can Monica ask the question, please?
If trust is giving us a donation, like you said, that the donation should be within that 85%. Is there any impact on us if that trust is giving from their 15%?
So, Monica, you're talking of inter-charity donation?
Yes, yes.
So let me just say that inter-charity donation, if you are the recipient of inter-charity donation and you are utilizing the money, that particular 85% clause condition doesn't have anything to do with you. You will have to treat that as a voluntary contribution. And if you are not making inter-charity donation, then the 85% rule does not kick for you. Okay, that trigger will not get triggered. However, for the trust that has given you inter-charity donation, they will show 85% as utilization. And since they have given 100% to you already, that 15% will be accounted in the set aside, set apart amount. They will also finally get that 100% benefit because they have given the 100% money to you. Earlier, there was some confusion in terms of interpretation, but that has been corrected at the time when they are filing. So that's not a problem anymore now. In a way, this 85%, application for the grantor is something that has got vitiated in a certain way. But as far as you are concerned, as recipient of funds from a trust, you have no problem as far as this 85% application is concerned. Your problem is of this 100 rupees of money that you get, you will have to utilize 85%. You can set aside 15% of this if it is possible. If you have to spend the 100%, you will not be able to set aside. If you can set aside, so if 100% has to be spent, you will spend 100%. There will be no question of setting aside. There will be no question of not fulfilling 85%. Got it? Manoj is asking how to report kind donation in books of accounts. So, the general rule is to report kinds at a market value of the goods and to also show it as an application. So basically, it's a contra entry as a pass through, and therefore it will be good to show kinds also in 10BD and show it as an application. That is how it is being done in practice. Shiv Prakash is asking what are the activities of general public utility? Uh, Things like organization doing some, uh, you know, urban development, or they are into some kind of construction work. Those will be something which will be considered as general public utility. What I would answer as general public utility is if what work you do is not classifiable under the first six limbs, then you will have to treat it as general public utility. Sometimes an organization may be just engaged in advocacy or public affairs or public policy. Then that may be the object of that organization and might not fall into one of the six limbs, and that will be also treated as GAPO. And many organizations are keeping GPU as an object, although they are not pursuing that GPU, just because they want to be sure that if in the first six limbs, if any activity that they are doing today or in future does not fall, then they can show it as a GPU. However, if there are commercial activities or if there are income by way of GPU, then the reporting is much more stricter. So one has to be very clear, especially where also under the, where the charity commissioners are there and the state charity acts are there. If we charge a small fee from the beneficiaries, like a fee from students of a charitable training institution, where such receipts are treated as donation, or no, they are treated as commercial receipts. Okay. But those commercial, those receipts from the education, okay, will be considered as incidental business income. That will be treated as business income, but incidental business income because of your prime objective being education. Now it is for you to defend. Many times the department is taking a very skewed view of the definition of education. Education means formal education. So what I'm saying is I cannot give a very conclusive answer. What this money will do is that what this money is not a donation. It is business income incidental, and you'll have to keep separate books from the charitable work that you might otherwise do if you are doing that. And you will have to report it as business income, but show it as incidental business income, not as commercial receipts in the normal, as a normal business entity, but as a business incidental income under 11(4)(a). Okay, that is how I would suggest. And you will have to report it accordingly in your 10B, BB, and your ITR 7.
So, Asha, is there any cap? So I can better way in a better. Let's say it's a medical institute or anything,
Uh-huh.
which is charitable in the nature. and we charge some nominal fee, let's say 10 rupees from the student or the patient or anybody. And while the overall cost could be very, will be definitely very high, and which is like supported by the CSR or from the grants, etc. Now, in this case, as you have rightly said, it's incidental to the charitable activities only. But is there any cap kind of thing?
Shabil, let me just answer that. The Supreme Court, when they decided on a markup, okay, or a profit element for business income, did not specify what that percentage has to be. So the markup is also something that you will have to defend. But your business income can have a component of profit, which means a markup or cost plus, what they call as what they have defined as cost plus, means anything which is plus to the cost, which is a certain markup. Now, in the marketplace, if you talk, people are saying maybe 15%, 10%, 20% is a good enough cost plus, which should be defendable as far as business income is concerned. Okay, this is how I would suggest. Now, the first part of your point is anybody supporting you by way of CSR for a particular project? Yes, let them support and you report. That's charitable. But from that project, if you are generating an income which is adjunct to your object, is the most important point. Okay, how kind of a twin, like a Siamese twin. There are twins now. They are all jointed. How closely is your business income from that project jointed to the object is for you to be very sure of. Once you generate business income, how much business income x, x plus 1, x plus 2, our x is your cost. Okay, so the cost has to be recovered. That business income will recover x, which is your cost. Now x plus 1, 2, 3 or n is something that has to be on a certain reasonable markup definition. Now what is reasonable is not even decided by law nor also decided by courts, but litigation, once it happens after this 2022 judgments, it might also settle what is a markup as considered to be the highest ceiling of markup.
Mr. Sharad, the question is little different. If I understand correctly, of course, I also have the same question. Like, let us say that okay, we are doing the tailoring training for the people. We are not trying to recover the cost of training or anything, but only to get them interested. We collect nominal fee of 100 rupees. That 100 rupees, now you are saying that it should be treated as an incidental business income. So there is no question of markup or anything.
Yeah. If you are, no, I was thinking that what Chabil is saying is that there is some business income which is, that income is costed. But if you are taking some small nominal amount of money, okay, let it be treated as business income because it is adjunct to your charitable work, and it will be treated as miscellaneous income in your income and expenditure and treated accordingly.
Yeah, my question was similar to like Krishna only. So since like let's say our CSR funds or the other donations are not sufficient to cover the cost, and a small fee if we charge from the beneficiaries, according to you, it should be a business income, right?
So what happens is that if the beneficiaries are paying you, now the question is whether it's a donation or an income. All right, will
Yeah.
depend on whether you are providing any services to them or not. If you are providing any services, then it cannot be treated as donation. It is some kind of a fee for service. Now you will have to see how that entire transaction is set up. Is this something that they are giving you for a service that you are rendering? Then definitely is not a donation. You are rendering a service, they are giving you some money. That's an income for you.
So
But
earlier you
if it
said
was
20% cap or something that you said.
no, I didn't
Okay.
say 20%. That's what how people are talking in the marketplace, that if so that was the markup, that was not contribution. That so suppose 100 rupees is what is required and 85 rupees or 90 rupees is what you get from donors and 10 rupees is what you get as the amount. There is nothing like markup. That's only a contribution that they are making for services that they are getting. Okay, but that's not a donation because donation doesn't have anything in return. Are they getting any benefit because of making that contribution? Yes. Is it correct?
Yes, yes.
Correct. So there is a question. We are finding difficulties in finding out objects of the trust who's giving us donation, as they are not sharing trust deed or not providing any information on their letterhead as confirmation that their objects are no your whatever they do is whatever is their business. The money that you get is for a project which is which is matching with your object, is what I'm saying. You don't have to see their objects. They will see their object when they will approach the department to say, well, they gave money for the objects for which they are set up. When you get the money for the project, please see that the project and the money is for the object which you can pursue, is what I'm saying. I am very clear on one thing, that when it comes to FCRA, whether it's a foreign source or not is something that you need to know. When it comes to anybody making a donation, okay, it's for that organization to see whether that object for which it is making that donation is resonating with their charter. When the money is coming to you, your responsibility is to see that whatever money you are getting for pursuing a program or project is in line with the objects which you can pursue. That is what I am saying. So other than for the object for which you are set up is a cause for specified violation and therefore cancellation, as I had mentioned. Any deadline, timeline of filing of Form 10AB on donation request? No, there is no timeline. So please remember, there is no timeline that has been fixed, but the more delay you make, the more chances of getting it with difficulty. You understand what I'm trying to say? Okay. What is Neelam's question? Neelam, can you unmute and ask me your question if you have? Okay, Neelam. If trust deed specifies to do social work within one specific state, and if trust want to do project with other states, then the state mentioned in that deed, then it will. The best thing for you to do is to convene your EGM and pass a resolution for multi-state. If it's a society and you are working in a state, then it's a state society. If you are a society, if the trust deed you're saying, so I'm just telling you about a society, then you will have to enlarge your governing body to beyond that state. That is for a society. If it's a trust deed and it specifies the geography is X and you want to know in the Y geography, then make an amendment of the trust deed, file the addendum with the registrar, sub-registrar or registrar of registrations. Then you can also file that change with the income tax department. That will be all right, no problem. And if you are FCRA registered, then you will have to file forms FC6A for change of name or states or whatever, or may not be required because it's not change of registered office. So basically what you have to do is make an addendum through a meeting of the board of trustees, and that addendum should be registered and you can file that with the income tax department. That should be all right. And then you can work in other states as a trust, as a society. You will have to make those changes, also file it with the registrar of societies, and also expand your board if it's a society. No, charity commissioner is present not only in Maharashtra but in many other states. Wherever there are state trust act, it's available in Karnataka, in Gujarat, in Maharashtra, in Rajasthan, in Madhya Pradesh, many places. So only Maharashtra is because of the fact that Maharashtra Public Trust Act is older. Number one, number two, the scrutiny or the action by the charity commissioner in Maharashtra is more often known. That is why Maharashtra Public Trust Act, the Maharashtra Public Trust Act 1950, there is a lot of work. But there are states where there are charity commissioners, and under those states you'll have to comply with those trust act with the charity commissioner. Yes, there are tedious compliances in Maharashtra where, because you are not only, if you are a trust, you have to register with the Maharashtra Trust Act. If you are a society, you have to also register with the charity commissioners, both in Maharashtra, Gujarat. There are a lot of compliances in terms of, assets, in terms of investments and things like that because of the provisions there compliances in terms of annual reporting, compliances in terms of change in board. So yes, it is there. Because of that reason, between society trust and Section 8 in Maharashtra, people are opting for the Section 8 form of organization. All right. So we can stop here. No, I have not covered Chabil, the preferred legal structure. So that's not part of our discussion here. Society versus trust for Section 8 will mean that we look at each of these structures in terms of regulations, in terms of procedure. So I have not covered that. I just very passingly mentioned when we were talking. Yes, it is available. It should be available. It's available with me also. So, but we are not covering that in terms of distinction or superiority, inferiority, or judgment about which structure. But yes, you can get it. Not a problem. All right. So I'm sorry we have not completed the first session, but I don't want to rush into just doing it for the sake of doing it. Uh, Thank you very much. I hope it's been a learning experience for you. We will do this, the remaining part of this, as well as the provisions, other provisions on TDS and other things in the next session, and I hope to complete it. Thank you very much. Thank you for your patience. I hope it has been a good learning experience, and I can promise you that the next 7 sessions will be equally entertaining and educating. I cannot claim that I know everything. This is a huge topic, uh, but I can only claim that I will like to at least direct you to these laws in such a fashion that at least it opens up your thought process. Thank you very much. See you next Friday at 3 p.m.